Hello and welcome everyone to Gold Asset of the Day for the 3rd of August 2022, presented by myself, Phil Carr, at the Gold and Silver Club. In the last 24 hours, we've seen gold prices slingshot higher, breaking out to 2-month highs. Last week, we saw gold prices have their strongest performance in 5 months. Silver prices, they gained 9%, copper prices, they gained 8%, and platinum prices gained 5%. Everything that we talked you through in the previous week played out. Big opportunities last week to be accumulating gold at that 1710, 1715 handle before over a 700-point breakout to the upside in the last week, following on from last Wednesday's FOMC statement where the Federal Reserve, they increased interest rates by 75 basis points as expected, and that set up for over a 500-point breakout to the upside for gold within 24 hours. Not only that, of course, silver prices, they've broken out over $2 from the lows to the highs in the last week, and we've also seen platinum prices and copper prices have a tremendous surge. So platinum prices, they're up over a 1,000-point move in the last 2 weeks. Copper prices, they broke out 8% as well, trading back towards their 2-month highs. And again, we've highlighted these opportunities to you on the week ahead commodity reports and, of course, gold asset of the day as well. So I do hope that many of you have been able to capitalize on the immense moves that we've seen in the last week. Now, as it relates specifically to hedge funds and money managers at the moment, there's not been a great deal of change in the last week, as many traders out there were on pause ahead of the FOMC statement, not wanting to take too much risk, which is perfect for us because this is where we sniper in. We build out our positions before major central bank announcements with the view that we'll capitalize on that slingshot move higher, which you've seen yet again. This has been the playbook from the FOMC statements over the course of 2022. Not only that, the European central bank announcements as well, where we saw, of course, an increase in rates by 50 basis points. And this week on Thursday, we now have the Bank of England, which are anticipated to increase rates by 50 basis points. Now, alongside that, we've seen geopolitical risk get heightened over the last few days as a result of Nancy Pelosi visiting Taiwan. And this has certainly heightened tensions between China and the USA. This, of course, helped gold prices overnight break out to 2-month highs. So we're keeping a very close eye on that over the course of this week. And we also have on Friday non-farm payroll data. That can be a major catalyst for huge moves in the markets. As we talked you through last week, we've scaled into a number of positions on gold, on copper, on silver and platinum. In fact, we've got 4 positions at the moment on copper and 4 positions at the moment on gold. We banked a windfall amount of profit at the end of last week, scaling out of our positions, banking into strength over 2,000 points banked with our clients at the Gold and Silver Club. I do hope that you've also been able to capitalize off the back of all of our analysis. If you're not making money in these markets right now, you absolutely should be, and you must be doing something wrong, because it's been very straightforward over this cycle to capitalize on all of these moves that we've seen over the last couple of weeks. And now what I'm seeing a lot of is traders, they're coming late to the party here. They're now starting to FOMO in. They're getting in towards the top of the move with their delayed confirmations, and they're very quickly getting liquidated. So like we've seen with gold, over the last 24 hours, we broke out to 1787, bearing in mind that all of our trades, they're much lower, down towards the 1700s. Then we very quickly had a washout move and profit taking from 1787 back down towards 1755. So over a 300-point pullback. So any FOMO traders, they get chopped up, they get liquidated just as the price is stabilizing again and getting ready to consolidate and bump up higher again. Over the course of this week, the range I'm looking at for gold is the 1750s up towards the 1800s. But just bear in mind, our positions are much lower on gold. I'm not looking to add at the higher prices for now. Our main job right now is to scale out of more profits, particularly later in the week off the back of the Bank of England interest rate hike, and also on Friday with non-farm payroll. If we do see that as a major catalyst for a bigger move higher back towards the 1800s, our main job is to scale out of more profits. This is across the board on commodities, and we also took the opportunity at the beginning of the week to scale in and build a dollar position here as well, where we've seen the dollar break out over 100 points at the beginning of the week off the back of geopolitical risk that we are seeing right now, which tends to favor both gold and the dollar. These are the times where you can actually see both gold and the dollar move in tandem, as you do see capital flow into safe havens. You could see potentially other commodities under some pressure, but dollar and gold still rallying. That's also something to be mindful of over the course of this week. So again, I do hope that many of you have absolutely killed it over the last week. Certainly our clients at the Gold and Silver Club have been able to also bank a windfall amount of profit on these slingshot moves higher that we've discussed with you time and time again to expect on commodities, especially in the lead up to the FOMC statement. The subsequent rally has been immense. Gold breaking out over 1,000 points now in the last couple of weeks. We've seen platinum prices also break out over 1,000 points. Again, silver prices breaking out $2, 9% move in the last week. So well done if you have been able to capitalize on these moves. If not, and you've missed out on these moves, I would suggest that you're using the wrong approach to the market. You definitely want to ditch those outdated technical analysis strategies or gimmicky technical indicators. It's 2022 where you need to be utilizing data, market intelligence, statistics, and research. You want to be utilizing and learning the daily, the weekly, the monthly, the quarterly cycle for each commodity. Understand and learn the capital flows for each commodity. Alongside that, the intermarket correlations, the ratios in the market, key areas of liquidity, and of course, learn the macroeconomics, the fundamentals, the geopolitical risk, and how the hedge funds, money managers, banks, and institutions are positioned in the market, and align that, of course, with data and market intelligence, and that will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to join our professional mentorship program.